Hey guys, welcome back to the 12th episode of the Friday Ticker. In this episode, I'm going to go over just some recent trades of mine, selling options contracts, and we'll talk about it. So let's get into it. Now, I'm going to go through some stock charts and take you guys through kind of my reasoning for taking some of these trades and what some of the gains have been on these trades. So we'll first get started with UPS. Now, I think I talked about this trade in a previous video. It's been going on for about 3 months, and I finally closed out the position. So we had earnings back in August 1st, and it just dumped all the way down here, down to the 85 level. And I felt pretty good about this trade. I do like it when I see earnings and when a stock dumps like 10, 20%. It's a good time to get this sideways trading. That's typically what happens. You'll get a new base of investors that pile in at these levels, and it'll typically go sideways. And that is what we saw with UPS. So I sold some put options here, 5 contracts, which was 500 shares. And again, it went sideways for a while. I did end up getting assigned shares. The stock went lower on me. For a while, I was in the red, maybe a couple grand, not very much. And then, of course, around here, October 1st, we had a nice rally. And I had sold around $1,500 in put options. That was the premium I had collected. And then it rallied back up to this 87 level. That was the original strike that I sold these put options for. So I was in the green at this point. I could have just sold the shares right at 87 and collected my $1,500 and walked away. But I decided to sell covered calls at the same strike price that I sold put options at 87. I'm kind of playing this 87 level with this wheeling option strategy. $87 is my strike price. So I sold cover calls there. And then Donald Trump announced some tariffs with China again. And then it dumped. And I decided to close the position and make $800 free and clear. It was an easy trade, 3 days, piece of cake. And then I waited a day or two, waited for it to rally a little bit more. And of course, Donald Trump kind of backed down with China, or they agreed to something. I can't remember what the details were. So we rallied back to 85. And I said, you know what? I'm going to sell into strength. I'm going to sell some more covered calls at 87 strike, right up here. And I had sold them for like $1,100 premium. So in total, I had around $2,200 in premium from the puts I sold and from these new covered calls. And so I was just going to wait another 3 weeks and hopefully collect all that premium and do it again. But unfortunately, the earnings came around and the stock popped. UPS had laid off 47,000 employees. And this is unfortunate because with it popping $10 a share, I had lost out on all those gains from 87 to 95, which is where my contracts expired at on October 31st at around $95 a share. So I missed out on $5,000 worth of gains. But that's what happens when you sell covered calls in the stock market. But this was a great trade over a 3-month period. The total premium I had sold totaled around $3,500. So that's like $1,000 a month on a $47,000 position. Not too bad. I'm pretty happy with it. And maybe I'll get back into this because it looks like it's fading here. It's back down to 93. If it goes under 90, I might sell more puts at 87. We'll see what happens. So I'm going to keep my eye on UPS still. And it's got a decent dividend. So if I do get stuck with shares, I'll get a dividend, right? And then my next stock is Target that I'm still involved with. This is still an open position for me right now. Again, I've been in this trade for a while here. I think I started this trade like around August 19th. It dumped down here to this 95 level. Traded around, I think I got in around, August 29th, around $96 a share. And I sold a total of 10 contracts one right here, and then it dropped some more, and then I sold another 5 here. Sorry, 5 up here and then 5 down here. So for a total of 10. So I'm in this thing for 90 grand with 1,000 shares. And I did the same thing as I did with UPS. I saw it starting to rally over, I think it was right here. It rallied a bit. I sold covered calls at strike prices of 95, I think it was. And then it dumped down here to like 85. So these contracts went down to nothing, and I closed the position for $800 as far as these covered calls. So I still owned 1,000 shares, made $800 on the side, and then it rallied again, and then I sold covered calls at $95, way up here, way out too. I had to go far out to get some decent premium, out to November 21st. So in 2 weeks, these contracts expire. I sold 10 covered calls for $3,100. And for a time period, I was down quite a bit on these covered calls because the stock rallied up to $100. I could have sold shares if I didn't have these covered calls in place. But now I'm back down in the red. But I'm probably going to collect this full premium of $3,100. I have a feeling these contracts will expire worthless. And then I'm just going to sell more covered calls and hold target stock. Now, there is a dividend coming on Wednesday, November 12th. So I'm going to collect, let's see, $1.14 a share. I'm going to collect $1,140, as well as the $3,100 I sold in premium. So this is going to turn out to be a nice, probably $8,000 in gains on this stock. Now I have to get out of the stock. I still want to get out in the green. So I'm just going to sell more covered calls, and hopefully the stock kind of trades sideways and maybe up, and I can get out of the stock. We'll see what happens. So that's Target, and then Oracle is my new position that I took out recently. Now Oracle, they had this crazy pop from this OpenAI agreement. You know, everyone's trading money in the AI trade. So it went from like 241 all the way up to like 345. And I was like, man, I wish I would have got in it. But, you know, hindsight's 2020. But again, if you keep your eye on these stocks, there might be opportunities to get back in because the story changes. The narrative is always going to change, you know, based on just short-term news. So it faded quite a bit. It's been bouncing around between like 290 and 320. And, you know, it kept fading down. And I've been eyeballing this. And when it got to around 270, I said to myself, I might take a position at 265, right around here. But then it went lower, right down to like 260, 258. And I was like, okay, forget 265. Let's go even lower. Let's get it for even cheaper. So then I said to myself, I like the 245 area. It's right around here. You see a bunch of trading going on here, right at 245. And so right when the stock dropped here, or was it here? I can't remember which. I think it was around here. No, October 31st, I sold 2 contracts, which is 200 shares at a strike price of 245 down here, for about $1,000. Okay, I was a little, you know, early to this trade because look, the stock went down even further. So what did I do? I sold one more contract for another $1,000. So now I've got $2,000 in this trade, but I've got to pony up $75,000 for 300 shares of Oracle at a strike price of 245. And these expire in 2 weeks, 2 weeks from today. And, you know, for 2 or 3 weeks for $2,000, that's a pretty good deal if I can get out of this trade nice and clean. We'll see what happens, but I have a feeling we're going to get a relief rally, maybe a pop up to this 260 area. Maybe it'll trade around there for a week or two, and then I can hopefully collect all this premium without even getting assigned shares, and then maybe I'll do it all over again. We'll see what happens. But if I get assigned shares, I'm just going to flip to covered calls in 2 weeks and maybe collect another $2,000. We'll see what happens. So that's Oracle. And then I did get involved in a speculative stock. I don't recommend getting involved in this thing, but one of my trading buddies recommended this stock. It's called Resolve AI, RZLV. I can't even remember the ticker name, but it's real volatile. So the premium on this thing is super juicy. Now, as you can see, this thing went all the way from $4 to $8, like, in 5 or 6 trading days. So it's real volatile. Then it dumped all the way back down to $4.50, back up to $7.50, then all the way back down to like $4.20. And this is where I got involved. I said, this thing's probably going to do another spike or a rally. So I sold a 3-week contract at $4 strike prices. Now, when you're getting into these kind of smaller pennies, this is a penny stock in my opinion. It's really illiquid as well. There's not a lot of volume on this trade, but there is some volume on it. I sold 25 contracts, which is 2,500 shares at $4 strikes, which means I need to pony up $10,000. But I sold this for $1,000, so that's 10% of the actual position size. So it's really juicy premium. And again, it's a November 21st expiration, so it expires in 2 weeks. We'll see what happens. I'm in the red right now, maybe by like $300 as far as stock price goes. But this thing will probably bounce a little bit. The AI hype is still going on. We'll see what happens. I could get stuck with these shares, and then I'd have to sell some covered calls. But yeah, we'll see what happens. So those are my 4 most recent trades I'm involved in. Pretty excited about it. I think year to date, I've only been trading options for like 4 months. I think I'm up like $12,000 around there. And hopefully by year end, my goal is maybe $20,000. If I could close these trades out for $6,000, 6 plus 12 is 18, plus maybe like I'll trade maybe two or three more options, maybe get up to 20 grand. That would be pretty good for 4 to 5 months of trading options. I'd be pretty proud of myself. I've been very patient with these trades, very tactful, and happy with the results. It hasn't been easy. It does get emotional. Sometimes you see the stock going against you, and but it is what it is. You have to take your emotions out, especially if you're doing any sort of short-term trading. This is short-term trading. If you're trading for 3 months, it's short-term. It's not investing, okay? So be very cautious with this type of stuff if you do get involved in selling options. Again, I'm not a financial professional. I can't tell you what to do, when to do it, how to do it. These are just my trades. I'm just giving you guys insight into my thoughts and how I think about stocks when I'm selling options. And I'm looking at the chart. I'm seeing how things are shaping up, and I'm trying to minimize the risk by waiting patiently. That's really the key to this game, is you got to wait for your setups, wait days, weeks, even a month or 2 for the perfect setup for you to make a trade. So anyways, hopefully you guys enjoyed this video. If you have any questions, let me know in the comments below. And if you guys could, like and subscribe to the channel and take a look at my previous video. And everyone have a great day. Later.